Hello there. It's a beautiful day to learn about fundamental analysis. Isn't that right, Jelly? Yeah. She says, let's get into it. Let's not delay. We are going to go straight to the books. And here we are. So we are now at, well, let's just do a market case. Let's just do a stock. So we're talking about fundamental analysis. And so we say the overview, or we said in previous videos, the overview of this book that we're reading, which is Fundamental Analysis, is to pretty much become an investor. Become an investor, learn how to use both fundamental analysis and technical analysis. And we picked up on some keywords and some jargon, and we said a holistic approach. Let's go ahead and say that a holistic approach is using both fundamental and technical analysis, period. And let's say a core satellite approach to the capital allocation is a prudent market strategy. That sounds much better. And we said the mindset of an investor, and of course we're biased. And we're saying be an investor, not a speculator, not a trader, be an investor. And so now we're going to get into more chapters. Compounding effect, the ability to grow money when the gains of 1 year is reinvested in year 2. So what the compounding effect essentially does, or what you can do as an investor, you could purchase a share of a blue chip stock, something that pays a dividend. And with your brokerage company, let's say you go with Fidelity or Charles Schwab, you purchase a share of CLM. So what you want to do is you want to, upon purchasing this stock, there's an option. There's a box, guys, that you can click that is DRIP. The DRIP program. It's called the DRIP program. And what the DRIP program does is it reinvests your dividends. So you're utilizing the compound effect. We're going to see the benefits of the compounding effect. So this individual is an investor, and look at this. Data visualization goes a long way. So this individual is putting money into this company that has intrinsic value, and instead of day trading it, this person is just reinvesting the dividend. The chart shows how this investment value at 20% grew over the past, or over a 10-year period. Year 1, 120. Year 2, it grew 144. Year 3, and you see it goes up. It goes up. It goes up. It goes up. It took almost 6 years for the money to grow from 100 to 300. However, the next 300 was generated in only 4 years. So we see that the compounding effect in the long term will help you create money. So the longer you stay invested in a good company with intrinsic value. Objective: using the compound effect to grow money. Learning how to use the compound effect to grow money. 2.3, does investing work? Yes. When you invest in a good company, defined by investable grade attributes. So we can write that down. So this is jargon. investable grade attributes. So 2.3, section 2.3, fundamental analysis, PDF, keywords / jargon, investable grade attributes. So what characteristics will describe a good investment? And we're going to see. So the author is saying, look, if you invest in good companies with intrinsic value that are defined by investable grade attributes, you will always yield results. And we're going to go to 2.4. We'll sum up 2.3 with 2.4. Investable grade attributes. What are they? What does that mean? So we're going to see certain characteristics. Namely, we're going to classify investable grade characteristics using two headers. One, qualitative aspect. Quality, dealing with the quality of a stock. See quality and qualitative. And then the other, quantitative. So it's going to deal with some numerical value, the quantity of something, how many. So think of quantity, quality. So different aspects. So we can go ahead and write that down. Qualitative, quantitative, and both of these are what? Aspects. Qualitative, quantitative aspects. And so let's get into it some more. And so we're going to evaluate fundamentally strong companies. So we're going to study the information provided by a company or provided by third-party sources to see or to figure out which companies are strong, which companies are good. So let's define the qualitative aspects. Qualitative. So it involves the non-numeric aspects. So we're talking about management's background. So who's the CEO? Who's the founder? Who are they? Who is she? Who is he? What is her background? What is his background? What are their background, experience, education? Do they have merit to run the business? Do they stand out amongst other competitors? Does he stand out? Does her skills stand out among other competitors or other CEOs? Any criminal cases against the promoters? Are they doing shady work? Is it some inside trading going on? Are they using shareholders' money to put on this lavish front, this lavish lifestyle? So what's the business ethics? Is the management involved in scams, bribery, and unfair business practices? Do they have factories overseas where their workers are not even getting water? Their workers don't even take breaks. You want to invest in a company like that? Is it a private prison where the business model is ran like a hotel? They want to lock up people so they can add more money to their bottom line. You want to invest in businesses like that? Modern day slavery. So corporate governance, appointment of directors, organization structure. Are they transparent? Can you look on Yahoo Finances and see the numbers when you look at the financial statement? Are the numbers adding up? Minority shareholders. How does the management treat minority shareholders? So you're not big money, you're small money. Do they consider your interest while taking corporate actions? Share transactions is the management buying, selling shares of the company through clandestine promoter groups. Related party transactions is the company tendering financial favors to known entities such as promoters, relatives, friends, vendors at the cost of shareholders' funds. Salaries paid to promoters is the management paying themselves a hefty salary, usually a percentage of profits. Operator activity in stocks. Does the stock price display usual price behavior, especially at a time when the promoter is transacting in the shares? So that was the non-numeric attributes. Shareholders. These are the non-numeric attributes. Who are the significant shareholders in the firm? Who are the people with above 1% of outstanding shares of the company? Political affluence. Is the company or is its promoters too close to a political party? Are you invested in a company in Brazil that pays high dividends? However, the government is controlling that business. That would affect the share price. Does the business require constant political support? Got to know these things. Promoter lifestyle. Are the promoters too flamboyant, too loud for their lifestyle? Do they like to display their wealth? Too flashy. So a red flag is raised when any of these factors mentioned above do not fall in the right place. For example, if a company undertakes too many related party transactions, then it will send a signal of favoritism and malpractice by the company. This is not good in the long run. So even if a company has great profit margins, malpractice is not acceptable. It will only be a matter of time before the market discovers matters pertaining to related party transactions and punishes the company by bringing the stock price lower. Qualitative aspects. A diligent investor can easily figure this out by paying attention to annual reports, AR, management interviews. You're getting to know the qualitative aspects by listening to CEOs talk about the company, news reports, etc. So let's move into the quantitative aspects. So this deals with financial numbers. Some of the quantitative aspects are straightforward. So the stock market pays a lot of attention to quantitative aspects. So profitability and its growth, margins and its growth, earnings and its growth, matters related to expenses, operating efficiency, pricing power, matters related to taxes, dividends payout, cash flow, debt, short and long term, working capital management, asset growth, investments, financial ratios. We're going to sum up what we have read. And so we looked at Yahoo Finances to see an example of a company that pays a dividend, a yield. And the beauty of this is not only does it pay a yield, you can reinvest it by signing up for the DRIP program. And so whenever you purchase a share of Cornerstone Strategic Value Fund, you request that your dividends be reinvested. When we get to learning how to read annual reports and analyze numbers on the income statement, balance sheet, cash flow, one would see whether or not this is a good company to invest in. Another chapter read. See you soon for 3.1.